Hey everybody, welcome back. S&P, after all is said and done, forms a doji of all things. So here we are waiting for something miraculous to happen. We're hearing about this Black Monday. Is the market's going to implode? We're all thinking that we're possibly going to get some kind of relief rally. And what do we get? A flat day that frustrates everybody unless you were a short-term trader. And even then, I found it extremely frustrating. We're going to tell you what to look for tomorrow, what names you really have to pay attention to that are coming out with earnings, what technicals you have to pay attention to, and I really want you to focus on the Nasdaq high-low and what it's telling us right now. As far as today for me was not very constructive. We're going to get into why, but I just want to point out the obvious. I mean, higher, lower high, lower high, lower high, lower low, and now we're waiting to see if we're going to get another lower low. Now, this is a really important concept, and I'm going over this on Saturday. And we're going to go over it a little bit right now and make sure that if you are interested, you are on the wait list because the room and community is going to open up again only one more time this year in November, and then we're shutting it down. So if we just come here, and I just want to focus on this particular area right in there, 4250. Now, why are we focusing on there besides the fact that we can break it, but we can't close below it? I think that's really significant. So the first level we're going to watch tomorrow is going to be 4250, and that's the one thing I'd like to do here is give actual levels that you can utilize for the next trading day. Now, if you look at my DTL or downward trend line, that's going to take you to 43.30, 43.32 right in there. So if you were going to see any kind of bounce towards the end of this in the DTL where you would be over it, it would be that level. So if we took this level and we moved to right there, if you just stayed there, you would still be under the DTL, but eventually you'd break it. You're going to want to watch that level tomorrow. I know most people won't understand why, but just watch 43.30 tomorrow if we see some type of massive rally. I doubt we see something like that barring world peace, and they're not exactly giving world peace out after hours here. So just watch that for 43.30. Watch how that coincides right here. I know it's not a level a lot of people are going to be watching, but it's definitely something on the longer term that I think we could get to if we really had a substantial bounce. Speaking of bounces, you're going to note that's going to take you right into that 22 as well. That's not a coincidence. So you have a 55 that is declining. You have 22 that we are below and is declining. We are below the 12 and that is declining. And as everybody knows, the 12 for me is, will I look at long-term swing trades? Yes or no. 55 is, do we have institutional support? The answer is no. Who's in charge? The bulls or the bears? The bears are in charge. So if I look at all this, why would I not be looking at adding to short positions today is really the question. Now, the answer was we were grossly oversold, and we're going to drill into the internals here once we get through the Nasdaq. But why? What's going on here? Well, we were grossly oversold, and I want to point something out on an hourly. We are no longer oversold. We were oversold since Wednesday. We got over where we needed to, and we're already below the 50 line. This is just simply RSI, and that tells me a lot already. And all I had to do to basically get flat on the day was trade up and then come back down and essentially be flat, and that got done the oversold condition. That is extremely telling that that's all we got out of this move. Now, whether you think that's bullish or bearish, I'm going to save you a lot of time. That's bearish. If that's all we're going to get out of this, that is definitely something that we need to pay attention to. We should have gotten way more out of that. I don't really view this as a coincidence that that DTL was hit today. You might want to look at that. Yes, you can draw a trend line on anything. If people don't want to, they don't have to, but you can draw a trend line on anything. So that's something that's of interest. So now we have a trend line there on RSI we couldn't break. We have these lower highs, lower highs, lower highs. We have everything declining. And just to put a cherry on top, we were once again closing below what? The 200 SMA. So RSI rolling, we are below the 200. I'm having a real tough time here trying to get excited because they squeezed tech today. That's just how I'm viewing it. I think it was great for people that wanted to trade it on the long side. That was not really how I saw the world today, candidly, but I get it. For short-term traders, we talked about this a little bit in the pre-market live that we were oversold by a lot. That oversold on the ES is worked off. I'm going to be really clear about that for people coming into tomorrow. Now, let's clean off my 1,000 lines on the Nasdaq. And before I get into the Nasdaq high-low, which we're going to spend some time on because It's really important that you understand where we really are right now. And I was asked to get into some of these numbers on your comments. So I do read your comments, and I want to just show you internally what I'm looking at, and then we're going to drill into some other things on the S&P and two names you really need to watch tomorrow and what you need to watch with them. I think it's really telling when you see Microsoft and Google and what you need to look for. We're going to get into that in a little bit of detail on what institutions we'll be looking for, so you can have a little bit of an edge there. Now, if you look at what's going on here, what do we have? We have lower highs, lower high, lower high, lower high. So at the end of the day, nothing really is changing there for us. Okay, we come across here and say, well, what has developed today? Well, this looks really familiar. It looks very, very similar to a stock. If we think about it, that looks very similar to what? To NVDA. Very similar to NVIDIA. Keep that in mind as we go forward here. So we understand what we look like. We understand the DTL. We understand that we still have a sloping up 200-day. Now, we drop in the 55. We have a declining 55, which means what? Institutions are not bullish right now on the Nasdaq. It's declining. The 12. Do I want to have swing trades on? Not long term, maybe for a day or two. The 22. Who's in charge? Bulls or bears? Bears are in charge, and it's sloping down. So if you just do the basics and you look at it from the basic standpoint, forget all the noise, trade what's in front of you, trade what you have. Don't tell me we're going to break out. Don't tell me we're going to fall apart, because quite frankly, nobody knows. That's what we have right now. At one point today, they were releasing 50 hostages. 15 minutes later, they were saying we need trucks full of fuel. And I would expect it to be like that, news driven. Now, we all know we have PCE and GDP coming out. But that is the last thing that I am really concerned about at this stage. More concerned about what is going on now that we have worked off that oversold. And I think that this is really very telling again. We're over, and that's all we got out of it. This is the big move we got for being oversold for 3 days. That's the move. And even if you count back to here, you could actually say that you've been oversold for a week. And the big move we got was this. That's a problem, guys. That's a problem. If you take a look at how this is shaping up, well, I would use this more and then drop it down to here. And from here, you could come over and drop it again. And what you're doing is you're seeing that fan pattern that we talk about and how it's declining and getting worse and worse. I view today's activity, and I'm going to show you this in a minute, I view today's activity as more bearish than anything else. I just do. It's just the way that I view it. And I want to point out a couple things. Even the 4-hour that was grossly oversold at levels that we rarely see, and we pop back over, this is all we could muster out of that so far. Now, maybe we get more tomorrow. Maybe there's some good news, hopefully, out of the war. But for now, that's what we have. And I think the reason is the complete lack of participation that we're seeing in the Nasdaq, and that's going to take us into the high lows. In front of us is the Nasdaq high-low ratio. Now, there were a couple things that were pretty glaring about this when I looked at it, and I thought it was worth our time to spend understanding first what it is for those that aren't aware of it. It's a breadth ratio constructed from the new highs on the Nasdaq and the new lows, and then you get a ratio. The new highs are the number of Nasdaq issues that closed at a 52-week high. New lows are the number of Nasdaq issues that reached a 50-week low. It's really not that complicated to get, but it's important for us to understand before we get into it. So let's say there's 100 issues, 30s which were at new lows, then the high percentage would be, and they show you how the calculation is from there. And it can gyrate wildly day to day. People will plot this. In other words, they'll use some kind of moving average associated with it. And then it gives overbought or oversold conditions. There's something to that. And the way that they're using it here, and I want to be real clear about this, one of the most effective ways of giving a contra signal when we're clearly in a long-term downtrend and this indicator becomes overbought is effectively a sell signal. When we are in a sustained uptrend and the indicator becomes oversold, that is a buy signal. So they're telling you, dependent upon how the market's moving, is the way to utilize it. Now, I think there's a better way to utilize that, and we're going to get into it. But if we go here in 3, and I want to focus on the 3 for a moment, but let's look at the 5. So we're going to have to take this out, and I'll say it because we don't have $1.7 trillion in the market. Powell's not buying everything that's not nailed down. So we have to understand that, and then we have to look at, all right, historically, where are we? In other words, historically, how many times are we near the new highs versus where we are, something like this. Now, we know why we were here. But if we go back further during periods of time where we have just straight buying, going back 10 years, look at this. Look how high you are. Look how many times you're not down here. Let's go back 15 years. Okay, here you are coming out of the great financial crisis. Look how high you are here. Look at the breadth in the market. versus how long you were down here during those periods. It's about 20. And you can see 08, 09, and how long you were down in this area and how much and how high you were up here. Now look at us compared to what's coming out of there. Now this is one of the things that people have been saying a lot of, is that the breadth of the market is just awful. So we'll just drop that to a 10, then a 5. Again, I don't really want to use this, and we all know why I don't want to use that. So let's just focus on what we have. This is what we have. Now, this is 3 years out, and there's a couple distinctions that I would point out. You'll see that the breadth here is beyond weak, meaning the time that we stayed up here was very, very limited. Okay, that could be argued as, well, you're just coming out of it, so we're attempting to rally. And okay, that's a valid argument. But here we are, and that's the best that we mustered after this on all January. And we're not rallying. So one of the core issues that people have been right about is, can the market continue to go higher the way that it was, which this was the peak, this is where we're at. Can the market go higher with the breadth collapsing? The answer is no. After a while, it just gets exhausted, because you can't have NVIDIA keep doubling, which essentially is done from the bottom, and Microsoft keep rallying and not pull up the rest of them. If you're not pulling up the rest of them, there is some kind of structural issue. And that's what I want to focus on. I want to focus on, is there a structural issue? Well, this is what we know. Historically, if we are below this line right here, we go down and we underperform the market. Historically, if we are above here, we outperform and the market goes higher over a longer period of time. And that's how I want you to wrap your head around this. So what am I saying? I'm saying that until we get back over this line and start heading higher, meaning the breadth of the market gets better, we start hitting more 52-week highs again, I would start watching your 52-week high list and just assume that as long as we're down here, the Nasdaq's going to continue to underperform. Now, we had a nice move August, and we started lifting, and you can see that lift right in here. Now what we're going to do is we're going to drill into this a little bit here on the year chart, and that's all we're looking at now. We're looking at 1 year chart. And we're going to see the peak right here, and we're going to say, wow, we peaked here, and then this happened. Yes, it did, but there's something very distinctive that happened here that is not happening here. At least it's not happening yet. And that's what I'm doing. I'm trying to get everybody mentally to get ready for the next 2 months with this video. That's where my head is, because we're going into the end of the year. But the breadth for this entire move got better. The high-low ratio on the Nasdaq got better this entire time until it peaked, and then that marked the high. We're not even anywhere near breaking that level. A matter of fact, and now you're at a zero. I don't know how long you're going to stay at a zero. I don't care. But you're going to have to realize that you're going to bounce around in this range, and then we're going to have to figure out what to do about that. Now, this is the one thing that I would be focused on more than anything else. I'm going to go to year to date. Now, when I go to year to date, obviously it's going to be a thinner line. It's going to be more specific to the time period that we're dealing with right now. And again, you can see the peak right here when we're over this peak, but then you pulled back and then you went higher. So it's not only just where we are, it's also the trajectory of the move. So I'm sure everybody got that already, but just point that out. You can see as the breadth increases, or as more names hit new highs on the NASDAQ goes higher. Now, what this will do is this will give us an understanding of what's going to happen. So if I'm here and then here, so in other words, you have a move here where this one's going like that, well, you're really going down a little bit. So you really don't have the divergence yet. And then you start looking at how this is playing out. It's starting to make sense why you'd go like this, because you're not hitting new highs. So if we understand that, and then we drill into this just a little bit more and go back 6 months, we're going to see something. And what we're going to see really doesn't make me feel warm and fuzzy, which despite my calm nature, I like feeling warm and fuzzy. So you could look and just draw straight across. All right, so this to here, okay, that makes sense. Now, what doesn't make sense is if this follows, that's great. If we don't follow, that's a problem. Now, why is that a problem? Because what's happening here is we are dropping down. And as we're hitting new lows, and I get it, you can't really go past zero for new lows. If we look across, and let's just take this point, and you can see, we can make the argument, well, that's about a little lower. All right, that's not lower if we draw that. So this line's super thick, but you get it. And what I'm getting at here is if we even take this out for a moment and just look at these levels right here and here, if you just looked at this comp right here versus where you're sitting, versus where you're at here versus here, you haven't dropped yet. And that's the point that's bothersome to me. In other words, we haven't come down we haven't followed the Nasdaq high-low ratio in the same movement that we've been following it all year long. We have this dip overall, but this movement in here, that's reflective. The movement from here down is not reflective. And I get it. You can only go so low here. And that's important for us to understand before maybe there's some kind of bounce. And I'm going to show you in a moment here why there can be some kind of short-term bounce out there. But where I'm really going with this and what I want people to get is here's the 3 again, here's the 5, here's the 10. What I'm really getting at here, 15, 20, and let's go back to this 3. And I can only focus really on the 3 more than the 5 because I don't really want to use this data for obvious reasons that I won't annoy everyone again with stating one more time. But if you look at this area, that was clear underperformance. And when we are above it or heading higher, we get outperformance. Well, right now, this is where we're at. And when we tried to rally, we were completely... So we have to take what's in front of us. But I do want to drill into the New York Stock Exchange a little bit more. And I really do want to drill into the S&P and look at the internal so you know what to expect next week. Now, before drilling into the S&P and some of the internals there that I think are important, I think there's a couple things that we need to pay attention to here on just a broader scale. This is the New York Stock Exchange Composite NYA. I'm looking at the weekly chart. Right here, we are looking at the breadth of the market. And we can see that very clearly here. Green is identified, advancers, declines, and we can see this pretty clearly, right? And I mean, we can just very, very simple. Obviously, this is the pandemic. We can see where 2023 is and how this has been playing out. And what you're going to note, I'm going to blow this up because I think this is really important. What you're going to note here is that from 23 on, you have this slope down. And then here, you have this slope as well. So I think we're at some kind of crossroads here. And I don't know which way that this is going to go. I'm just being honest. I really don't have a clue. But this is getting tighter and tighter. This is not how it goes. It doesn't stay tight. It either exacerbates one way or another, meaning as we knew we were putting in a bottom, it started getting kind of goofy down here. As we started putting in tops, you can start seeing how it got a little goofy ahead of time. And you can see here during the pandemic, and then you can see the washout, and then it just gets quiet. And then once it gets quiet, you get a massive move. We're starting to get quiet. Now, if you had to assume which way this was going to go, and never assume for so many reasons, you would have to assume that it's going to roll over. I'll show you why. Number one, and I'm giving a little bit more context into a larger picture, but I'm doing that because I try not to make Saturday's video as long as it probably should have been. But you can see the Ichimoku cloud. I just want to point out the obvious and be Captain Obvious. You came out of the cloud, and guess what happened last week for the first time? You are back in the cloud. This is not where you want to be. The cloud's going sideways. It's telling you that long term we're setting up to go sideways. The breadth of this, the extensive amount of names that are in the composite does not make me feel great that that's what we're saying. Now below is the McClellan summation. It is not the oscillator, but the summation. There's a difference. You want to look at the summation. You can look at the oscillator all you want. I want to look at the summation. The summation gives me way more data, and the summation is based upon the oscillator. I could do a whole video on this. I plan on doing more educational videos. If this just is pretty in-depth, I don't know if I'm going to do it on this one or not. You can comment below. I do think I should do some more in-depth videos for people that are more intermediate to advanced as far as trading. But anyway, you can see the line right here and how this is following down. These crosses, you can set your watch to. Now, what do I mean by you can set your watch to these crosses? Meaning they are glaring spots for changes in trend. Let me leave these on for a moment. They are glaring spots for changes of trend. Doesn't matter which way the cross is. You can say it's the zero line. I can tell you right now, it's not the zero line as much as it's the cross. Now, if you're down lower, you have a better chance of bouncing, but it doesn't always work that way. So you have a little flip right here, and this is what we got out of that flip. Now you're crossing, and when is that cross happening? Just so we're really clear on this, let's zoom in on this cross, and we'll put those right back. Okay, this cross, Friday was here. Here's Monday. This cross just happened today. So we just crossed back over today. Now I'll drop this back down so that we can set up again, and hopefully I find the right spot so that they all fit perfectly in there, and they don't. So we're just going to get rid of them all, and I don't have time to edit this. So you're just going to have to work with me and deal with it, and I'll pop it back in. So we have a cross right here, and we just broke. That's what we have going for us today. That is not something that should make you feel warm and fuzzy. Let's focus on what else we can gather from this information, because there is other stuff here that I think is pertinent. I'm going to squeeze this down a little bit. The other thing I always like to do is just determine where we are. In other words, this is where we're at. Did anything major ever happen in this area? Well, we can see from this area, meaning where we are position-wise. This is where we are position-wise. And let's turn that back on, and we'll leave that on for a minute. And what you're going to see is right here and here. Okay, so anything along this line, did that determine the low? And the answer is no. You still continue to drop, even if you got here. Maybe you rallied a couple times, but when you are hitting this level, no, you're not really getting yourself in a position where you're bouncing. Maybe you're bouncing a little bit in a downward trend. Here we are again. Okay, maybe we bounced, but did that put in the low? No. Okay, so does that mean we're putting in a low? It's one data point, and understand everything we look at. People, if you're looking for an actual answer to what the market's going to do going forward, you're just better off getting a fortune teller, because nobody knows. What we do here is we analyze and assess and come up with probabilities. It's very different. This is actually what professional traders do. They assess it, and then they come up with a list of probabilities on how this is going to play out. That's what you want to do, so that you're aware of what to look for. And when you see those changes, you can act. You're going to see that when we talk about Microsoft and Google here in a moment. So here we are, and we can see that level right there. So this is really where we're looking for, where we can say that's where we had a bottom, right in here and right here. We are not there. We're at a spot where we could bounce, but it certainly did not give us a bottom. And based upon the breadth of the market, I don't think we're there just yet. Now, I'm showing you this for a reason. And you already saw this on Saturday's video if you watched Saturday's video. But this S5FD, right up here, stocks above the 5-day moving average. For people that ask about, hey, what is your drawing tool? It's just a screen brush. I'm on an Apple computer, because I do get questions about that. You will remember that I was showing you a 715. That was your number. Okay, now you're at a 695. So despite the rally that people saw today in some of the tech names, we actually lost more names, lost the 5 today. We actually made more progress on the downside. That's not ideal, and that's something we want to pay attention to. Now, it's starting to get to that point where you're getting to, all right, are we setting up for that bounce area? Possibly you start getting down to 5 or 7 on the 50-day. You start getting into that possible bounce area. But we just had the bounce. We had a bounce today, whether we want to admit it or not. Look at stocks above the 200-day moving average. Look at where we are today. This is staggering to me that on that bounce, we lost more names. We actually lost more names on that bounce today. This is absolutely staggering that it's actually, the breadth is actually getting worse as we're trying to rally. This is the exact opposite of what you want to see on a bounce. You want to see the breadth of the market going out and going wider. It's why I went over the New York Stock Exchange. The oscillator kind of ties to that, but I'm not going to get into all that. And I would focus on these very clearly. They're glaring to me. And then you start looking at like the PCCE, which is just really the put call ratio in equities. No one's out there rushing. Nobody's out there rushing to buy anything. And then we start getting things like this, and this will tie us into some names that I really want to go over. Okay, maybe there's good data out there that people are getting excited at on NVDA. And don't get me wrong, I have a long-term position in NVDA I've done nothing with. But as a swing trade, if you're going to come in and your strategy is, I buy when we're here, I wish you the best. I'm just going to leave it at that. I'll be nice. But that's not a strategy that we're just automatically going to hold here. Now, if you're day trading and it worked, I'm very happy for you. But this kind of movement, this is not sustainable. And this is the kind of thing that really starts to scare me a little bit, because you're not seeing accumulation, you're seeing short covering, and it's vicious. And you can see it off the open, that reversal. We get the short covering. We had some positive news. Look at this move at the end of the day. Let me show you this move on the video with volume, and I'll show you why this was somewhat concerning for me. Let's get rid of the pre and the post. I'm actually surprised that these are still up after hours, considering the news about Syria, which I'm sure people have already seen, and the attack on a U.S. base. But for some reason, these names are still up after hours. Personally, I think it's it's got to be retail playing around with them. But see this spike right here? Okay, that is not somebody that realizes that they have to be in immediately. That's somebody that has got to be covering a short, and they cover it. Now, what is troubling about this is after that bar is bought, I'm going to zoom in on this so that you guys can pay attention to this. See all this volume right behind it? And then you get three minutes of volume. And then what happens? All red. And then what happens to that rally? That entire rally faded. That is somebody that has to get out of something, not somebody that is trying to build a position. And you can determine that by understanding the volume. Where was the consistency? Where was it over and over again? Why exactly at this particular time at 3 o'clock did somebody have to do that? There's only one reason. You had a call. You have a margin call. Someone said, I'll give you to 3 to either come up with the money or we're going to have to liquidate. And then they just go to market and there it is. And that's exactly what happened there. It's very clear. Or somebody's out of position grossly and had a trading error, which I doubt highly in a name of this caliber, but that could happen. But that said, if you see this, that's short covering. And to me, that was really glaring across the board because we didn't really go anywhere today. This was one that we actually, I shorted, and I'm okay with the short position. I don't like that it didn't break here, but I was looking for some kind of rally. I tried it a little bit down here, didn't work. And then we just tried to rally, and you just really were not able to get anywhere. All you really got to today on Tesla was, let me just clean all this off. All you really got to today with Tesla was one specific area. You gap filled and you formed a doji. Now, if you're going to be excited because you closed here and the 200's here, you closed below the 200-day moving average. You did not close over the 200-day moving average. Now, you flip the doji tomorrow, and if you want to be giddy then, okay, now you have something you might be able to work with from a technical standpoint, because at that point, you'd be flipping the doji and you'd be flipping the neckline of this head and shoulders. That would give you something that you could work off of. That would something makes you feel, okay, I feel a little warm and fuzzy. I flipped off this. I'm over. Okay, maybe I get the retest back down. Maybe I could get something. So maybe there's something you could do with there. But even Netflix, to me, I would take this today because at least it looked absolutely awful all day. All day this looked like it was going to fall off a cliff. And this, at least, I liked because you have great earnings. If you're looking for something, great earnings, and you just closed above the 55 today. And that's a hammer. So it's hammer time. So if we were to move higher, I want to go where I have institutional support. Remember, I use a 55, a 22, and a 12. You should use what you like. 55 is where I have institutional support. If I go from zero institutional support to having institutional support, you have my attention. And then I would overlay this maybe with a smaller time frame. This is the 3, the 5, and the 8. And I could see how they caught up to it. And this is where I'm at. And it makes my life really easy as a trader, guys. I mean, it doesn't really get any easier as a trader than just mapping that bar out right here and looking at it and seeing how this is going to play out. Now, for time's sake, I want to go through 2 names. There are a ton of names that are going to come out, but tomorrow, the number 1 names that we should be focused on tomorrow, let me clean all this off and drop this down. Number 1 name that we should be focused on tomorrow, to me, is Microsoft and then Google. For Microsoft, you're going to want to watch what they have to say about adoption of 365. So what I'm getting from people that are on institutional trading desks, and that's really how I cut my teeth, that's how I learned. What they're looking for is the adoption. It's more so than they're looking at that of 365 and the adoption of that and how they describe how much money they're going to make from that. That's what they're really looking for tomorrow. Overall, you're going to get the regular numbers and how they're seeing, but they want to see how that adoption of 365 is playing out. You're going to want to remember that tomorrow, and you're not going to get that till you're on the call. So remember what I'm saying right now. Whatever move you have after earnings does not mean that that's the move that you're going to have when the call starts. It could be negative and go positive. It could reverse. So be aware of when the call is, who's speaking on the call, and when they get to that point. If you're trying to trade this after hours, you're going to want to get to that. Google, the number 1 complaint I'm hearing out there is that they have no strategy whatsoever with AI that is definitive. I'm not saying that they don't. I'm saying that it is not a definitive strategy on how they're going to bring this to market. That is what we're hearing as far as chatter. If they come out with a definitive strategy, these people are not stupid. If they come out with a definitive strategy tomorrow, this could push tomorrow and could go higher. This week is going to make or break the rest of the year for tech until we have NVIDIA's earnings. It's a really important week for tech, and I would watch these 2 very, very closely tomorrow. That's it.